Hi, round markets and value. So today we're going to look at Alibaba, and it looks like the stock is probably finally reached its bottom, and all the positive news is coming out now. So we're going to go through all the positive news, and trust me, it's a lot of positive news. Like, it's not just one or two snippets; it's quite a few. So firstly, we're just going to look at stock price. Stock price as of yesterday's close was 86.48, giving this valuation of the company at $232 billion, which is quite low in a sense. So that itself is kind of like an indicator that it's possibly worth buying. The immediate that good news comes in, when you're basically buying at the bottom, then you generally just do head up in general. And it looks like the good news is coming, so we can see right now in the pre-market it is up 6.42%. So we're going to go through the news of what's come out recently. So recently, Bridgewater kind of disclosed that they had increased their shareholding in Alibaba by 75% to over 800 million. So there's a bit of confidence from Bridgewater Associates. If you don't know, that's run by Ray Dalio, which you would have seen quite a lot. So he's usually quite a good investor. So people might take some of that as kind of like positive news, that that if he's buying in, then possibly other people might want to be buying in. And then we recently have a meeting that's coming, basically happening today. So we've got China's top political advisors. Basically, they're hosting a symposium to help the digital economy. So basically, it could just be a sign that, hey, we've actually, the big crackdown on tech is finally over, and the government actually wants to help tech kind of revive itself, so it helps the rest of the economy. It could be easing regulatory pressures in the sector, which is very, very positive news. So first we got Bridgewater Associates buying, we got the government kind of easing off. We've got Shanghai lockdown, city reaches milestone as it keeps community infections at zero for the third day, putting the city en route to June's reopening. So that's always a really, really good sign, because things can actually get going. You can go and get the manufacturing going, everyone can get on with their lives, buying stuff and whatnot. So we've got that's really positive in terms of things going again. And then we've got JP Morgan. They're upgrading Chinese stocks after 2 months ago they said they called the sector uninvestable. So hence why you really have to be skeptical when basically analysts kind of give you their opinion, because at the end of the day, like, they only know so much, and sometimes they could be doing it with certain biases. That's the one thing you just have to be very, very wary of, that hey, even these big banks, sometimes they can work against you in terms of what you read, in terms of what they put out. So basically JP Morgan's upgraded Alibaba, and then basically said, hey, this is investable now. After calling it uninvestable 2 months ago, they told the market that this was an uninvestable in the next 6 to 12 months, but 2 months later they kind of do a flip-flop and said, oh, it's actually worth buying again. So that's the kind of thing that, hey, in a way, I mean, they could have just made a really bad call and they've just realized it and then turned it around. So I mean, in a way, it's good for them if they realize they made a mistake. But at the same time, if you're reading stuff about certain stocks and it comes from certain analysts, you just might want to be cautious that, hey, they're not always right. So I think that's kind of one of those clear things. And in the final good news is JD.com just released their first quarter financials. They look rather positive. They've got an 18% increase for the first quarter, and that gave them a $37.8 billion revenue for the first quarter, which is pretty good. So, and the market seems to like it. So we've got the stock up at 8%. So in a way, it's good for the sector. Like, it kind of keeps things moving. So, first news, Bridgewater's buying. Second news, China might be kind of easing up on the tech stocks. Third news, COVID seems to be easing. Fourth news, basically, JP Morgan's come out and upgraded a lot of Chinese stocks and said now's the time to be buying. And in fifth is JD just reported their first quarterly earnings, and things look very all right. They're not fantastic numbers, but they're good enough to basically get the stock kind of up. And yeah, like overall, it's going to be positive for Alibaba, and I think that's going to have the market upbeat and possibly a very, very good time to be buying into the stock because, all the good news is out, everything's in its favor, and I think market's going to like it, at least in the current time, at least for today, because everything's just looking very rosy, positive in this area, and the stocks are so suppressed. Like by the time it opens in pre-market, we're looking at $92, and is $92 a good pricing? Yes, it is a good pricing, even though you couldn't get it at the very, very bottom where it was like literally around that $81 zone. And if you didn't get it yesterday at 86, the next opportunity is around 92, and I think 92 is one of those pricings that is pretty good. Like I thought the stock was pretty good when it was just above 100, so obviously I think it's good when it's below 100 and even in the 90s. So that's kind of my opinion anyway. Always do your research as well, make an independent decision, and have a look at Alibaba because things look like it's finally turning around for what it was kind of like a hard time for this stock because the government was against it, COVID was against it, the analysts were against it, and finally things look like it's turning around. So let me know what your thoughts are, or if you have any questions, post below. Until then, good luck investing, everyone.